What's up, everybody? Your boy ForexFunded. As always, links in the description. Free Discord. That's where I post these videos first. If somehow you found it on YouTube, just join the free Discord. I'm pretty bored right now, not gonna lie. So I figured I would kind of break down what it is I just messaged in the chart analysis about similar price action happened after the August 1st Friday pump. So, and this, in addition to me just breaking it down, it's supposed to help you understand how and why the market moves, and we're going to get into that right here. So this is the Friday August 1st pump NFP. Then you can see this is where the market opened on Sunday. We right now basically have a fib from our low to our high, right? And we're not getting that full pullback, right? We have a fib from our low to our high. We're not really wanting to get that right now. And price is forming bullish, right? So we went bullish on the technicals. If you know what I talk about, this is our last lower high. Whenever you have a body above it, technically you could take a risky buy here with your stop at the low and you would be in profit. There are better ways to get into it. Better ways, I mean, use a fib, right? But back to what I'm trying to teach you guys. So this price action of just continuing up is what I'm saying we might have happen here. We might just use this little bit of pullback, which probably is like a 23%. I don't really give a fuck about it though. We might just continue up to complete what the market is trying to complete with this bullish push. So if you look back here in the past, how far back should I go is my question. I don't think this was like a perfect fib, but if you look right, here's your high, here's your low, which we talked about in the video. So from that low to your high, right, price came to 786 and reversed. Now this high also probably above 786, but you get the idea of what the market is trying to do. It's bouncing between fibs, right? 786, you ended up coming a lot above it regardless. So going back here, we completed our pullback because if you remember, so this is your August 1st pump. This is where we had the fib. We had a fib from here to get that 786. Then you had a fib from here to get that above 78. This is where you really started consolidating, right? Here's your high, not the all-time high, all-time high here, but here's your high and here's your higher low, which higher low because here's your prior low. Ever since then, we're just making consolidation price action. So you have to think, what the fuck is the market trying to do? It's trying to stretch time before we break well above or well below. So when you come here and you say, all right, we just had this big bearish push that left a higher low, and the pushes before it over here, right? This push didn't make a higher high, and you left a higher low. So leaving a higher low tells you you're going to go bullish at some point, right? You're not just bearish. So what do you think the market would be trying to do? And that's pull back to a fib, right? So it's not going to be perfect, but that's your fib, right? You're 61%. You're not going to say, all right, you're ready for pullback yet because you broke it by too much. I don't like breaks above fib or below fib by more than about 20 pips. It really depends on the how big the fib is. If it's a small fib, you can break it. You don't want to break it by, a lot. If you have a big fib like this, all right, you could say 30, 40 pips is fine. But when you have a fib of 73 and a high of 85, that's telling me that the market wants to touch the next fib. It wants to touch this 3,478.6 fib. 3402 is your fib. Your high is 3409. So that is still a pretty big break. But look at the respect for it. Instantly you broke above it and you fell. Then when you tapped it again, you left lower highs. You started to form bearish price action. Yes, you ended up breaking those highs, the lower highs, but with a rejection candle, right? So notice how here, after that big push, you didn't get pullback. You just wanted to complete your fib, right? Okay, so then after you realize you're bearish, blah, 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 you would end up moving that fib to that actual higher low and then to your high, right? We're going to speak on that here in a second, right? Once market breaks here, this low that you establish, you just start falling. So that's when you say, all right, you'll be able to pull a new fib, a bearish fib. And what would you get? You would get a 50%, which, you know, as you know, you could sell that with the stop 786 area, targeting your 27. Now, you didn't get that perfectly. That's okay, right? What was the market's objective? The market's objective was to pull back that big bullish push. What did you do? You came to 61, and then you started to form bullish price action when you broke these highs, which we went over, right? After you broke this high, this lower high, which tells you that you're bullish, this is a break of structure. What happened from your low to your high? What did you have? You had the same kind of thing as over here. You had messy price action at 61 and 50%. Messy, right? You have a good rejection, but then you don't make a higher high, so it tells you you're going to come down. Just a lot of fuckery, but same principle, right? You guys understand how fib is basically the market source code? All that I'm trying to teach you is how you can and you need to form a narrative based on what the bigger picture is doing, focused on what 4-hour, daily, weekly is doing, right? It becomes a lot more clear the higher time frame you go. Here you can clearly see the fact that, one, you have immense support and resistance at not only just this 34.15 big range point, not only this 32.55 big range point, but you're trading in between them, right? You bounced off of it, you came to the other range point, bounced off of it, came to range point to range point, right? First big thing, right? But it's also easier for you to see that here's that same high and here's that same low that we're talking about, and you're trading in between it. Basically a bull flag pattern, but we're not going to get into that. There are other things you can, talk about in terms of this current price action, which would be how the midpoint magnet of that zone, which is 33.35, is where we had respect, right? The market is going to complete its objective. It's going to try to complete its objective before a main objective, right? But by main objective, I mean, obviously, with this price action, it's telling you the market's overall objective on a daily time frame is going to be to break higher, to test that all-time high. It needs something fundamentally to do that. Normal technicals, normal price action isn't going to do that. Just like how this $500 push wasn't technical, it was fundamental. This was, I believe it was, what was it? It was Israel. It was Israel bullshit, right? Now, interest rates have the power to do something very similar. I can't say it's going to push $500 in a week and a half, because that's what it is. From your low to your high, and this is being generous, 15 days for $540. You're probably not going to see the same. But the market objective, in my opinion, is to break all-time high, get us well above this 34.15 range point, and establish the range from 34.15 to 35.75, right? Notice how I mentioned midpoint magnet, which you can use on any time frame. Where is your all-time high? It is at a fucking midpoint magnet. So overall, what we're probably going to see is whenever you go bullish, we will probably push in not a straight shot, but in the market's objective to the all-time high. Whether or not we break it or leave a lower high, that is probably what will happen. Retail traders that can't see the bigger picture and don't understand interest rate shit are going to want to sell that with their entire heart, right? Which probably will happen. You will probably get a pullback. But then, because of the interest rate being cut, you will likely see wherever there's a fib that's valid, if it's all the way back at the 34.15, you will see some kind of support and resistance formed. That way you can push higher, right? That's your big market objective, right? I went all over the place. But now, relating it back into current price action. This high to this low, which is current structure, where do we think market's going to push to, right? We broke 50 and 61 with one candle, right? So you wouldn't have tried to sell this, even if you were trying to sell over here. Okay, cool. I'm not going to get into that because I didn't try to do it. Where's the next logical place for price to go? 78.6, right? Which is 33.88. We've already had a box there. We've talked about this for weeks. Remember what happened here. We broke 50, we broke 61, but we still wanted 786, and then we pulled back on the big move, right? So that is very possible. That's what we're going to see. Whether it takes an entire week like over here, or whether it takes 2 or 3 days, we are likely to see us come to the first level of interest, which would be that 33.88. Maybe then we form some sort of whatever price action to get the big pullback that we're expecting, right? And if that's the case, if we do get a big rejection from 7.8, or whether we come up towards our 34.15 or these prior highs, I will end up adjusting my fib all the way down to the low to wherever the fuck the high is, right? And then I would just target the same thing. I'll target my 50 to 61, like what happened over here. Are you guys understanding, right? So initially, when this happened, I was definitely using the higher low to whatever the high is to look for pullback, but we didn't get that, and the move was extended so much that it's like, you know what, you can't just use this random point, right? You technically could, it still would have worked, in my opinion, right? It probably would have worked, right? If you wouldn't have moved it, you still would have gotten your area. You wouldn't have touched 786, but you have more precision using the whole move, right? You have more precision, so that's same thing. It's same but different. Just like how using this fib, say that we get 88.94. We have 33.50 and 33.41. If you use this low, you're going to get very similar. 33.55, 33.47. It's not going to kill you, but I'm just explaining that's why I would do it, because you have the entire move encompassed. But yeah, that's a really big thing that people need to understand to add to their trading. Okay, it doesn't matter what time frame you're trading on. You could be trading on 1 minute, which is stupid in my opinion, but you need to see the overall market picture and what the market is going to do. If you're able to form that narrative for what the market's going to do, it will be a lot easier for you to pick a trade on the right side of things, right? You could have said, all right, well, we know we're rejecting this 33.75 range point. We had a big bullish day. I want to sell it. Okay, you could have done that, and you could have made some pips, right? You could have sold. It would have had to been Friday, or if you would have just randomly sold market open, you still would have caught yourself 100 pips. I'm not saying you couldn't, but you need to understand the market objective, because say you sold it and you're like, oh, no, this is just pullback. We're not going to break that high. And then boom, your profit goes from $1,000 or 100 pips to zero. So hopefully you're able to understand what my Discord message was about. We might repeat that price action. We might repeat that. At this point, we're going to break higher. The next level we're going to travel to is going to be that 33.88 level. We'll see what happens there. It's fucking probability, and there's no one who can tell you exactly what's going to happen. But think about it. If the probability tells you that since June 15th, we have made lower highs consistently, do you think we're going to break the prior lower high just to tap 34.15? And then still come back? Because me personally, I don't think this big consolidation is going to be broken until we have interest rate, right? I could be wrong, but my narrative is that the big boys want to keep price consolidating for as long as they can. Simple, right? Now, because of what happened last week with Powell speaking, and most people's probability of an interest rate cut going even higher, that we get one, it's very possible to say that big boys have priced that in, that they're just wanting to really, really price it in and to break higher sooner, right? But the thing is for me, there's more probability that we don't break higher. So that's why I would be looking at that area. I'm not going to look to sell. It's just why I'm able to say that's probably the area. You can be Tory trades and just start putting trend lines everywhere, and you'll see that you probably would have trend line support there. Or you can really be Tory trades and say, let me put one from here to here. You can just add a bunch of them like you're a fucking child in a coloring book. I don't do that, and I'm not trying to rant for hours. I'm just trying to, point you guys in the direction that you need to be taking if you're really looking to be a serious trader, right? Obviously, I really wanted to get long here. There were multiple areas for me to get long, right? So the first area for me to get long, would have been after you broke this structure. I would have looked at a fib, right? You had an area to get long. You have a target. You have a stop loss. You would have made money, right? If you were using this higher low to this higher high, you would have got stopped out. That's completely fine, right? If you would have used the absolute low, you wouldn't have. Regardless, doesn't matter, right? You could have said, all right, well, here we have a low, here we have a higher high. Oh, look at that. We don't have respect for 50. We don't have respect for 61. But 786 does show you respect. Straight to negative 27, right? I was just not eager to take it because it doesn't really matter to me, right? Now, after continuing to break high, okay, yeah, maybe I'm late to the party. Better late than never, right? I am expecting a pullback at some point. Will I buy it? There is a chance, right? But that's not the point of this video. The point of this video was to really just help you guys understand why having an overall narrative, an overall storyline for what you believe the market is going to do, where you think it's going to go, why you think it's going to go there, and then trade within that storyline, right? You don't need to catch every single move. You don't need to catch the absolute bottom to the absolute top. All you need to do and where you end up making money is by taking a piece of the overall pie. As soon as you learn how to do that and be content with just taking a piece of that pie, you will become much more profitable than you already are. And if you aren't profitable, it will be at least the first step to you becoming profitable. You don't need a zillion dollars. You don't need a zillion pips. You don't need the entire move. You just need your piece of the pie consistently over time. So hopefully this video helps you in some way or form. Hopefully it opened your mind to a perspective that maybe you haven't ever considered, or maybe it opens your mind to a perspective that you thought didn't matter. I don't really know. I don't really care. I just hope that it helps you positively in some way or form. If it did, and if you're not already a member of our Discord, you might as well join, right? It's fucking free. And you get gems like this whenever I get bored at 10:50 in the morning and my son is still asleep and I have nothing to do, right? But hope you guys had a wonderful weekend and hope you guys have a great week.